Good afternoon, welcome to GrainTV. My name is Cody. Today is the 31st here, and we saw planting intentions as well as quarterly grain stocks move the market sharply. Following the report, let's take a look at the grain hedge trading platform and see where we closed off the day. Corn futures trading down 18 1/4 cents with a very directional trade following the report. Soybeans ends up closing up only 5 cents here, but that really doesn't do justice to the kind of volatility that we saw in this contract following the report. We were trading higher, we were then trading lower, went through lows that we printed back here on the 18th before closing back in the positive here. We had a 30-cent range in the 2 minutes following the release of this report. So very volatile trade here for soybeans. And then of course Chicago wheat here down 17.5 cents here on the day, really erasing a lot of the gains that we saw during yesterday's trade. Let's go over the prospective planting report numbers, as this was one of the major things that influenced the trade prices today. When you look at the overall numbers, you'll notice the actual numbers for corn that were released today was 89.199 million acres for corn. You'll notice that that is higher than the Reuters poll, higher than Landworth, Informa, as well as higher than Farm Futures Magazine. Pretty much catching the market by surprise and giving a very strong reason for people to get out there and start selling the futures market. That's one of the reasons why we had such a directional trade here in the corn market. When you look at soybeans, though, you'll notice we came out with 84.635 million acres. This is lower than the Reuters poll. It's lower than Landworth, pretty much lower than all the other expectations here and surveys by other groups. And this caught the market by surprise too. Immediately following the report, we were trading higher. Those gains were erased, and then we started moving lower there within 2 minutes of the release of the report. Then we turned right around and finally found a little bit of stability in there, but a very, very volatile trade here for soybeans. And you'll notice that this is an increase year over year, but when you look at it compared to what the USDA or what traders were expecting, just ended up surprising the market. And I think there's really this kind of tug of war. You have a bullish surprise on the market, but you have an overall relatively bearish tone to this contract. And I think that was kind of what was trying to get worked through within the couple minutes following the report. Let's talk a little bit about quarterly grain stocks. The one thing that was worth highlighting here is corn quarterly grain stocks as of March 1st. You'll notice we had higher stocks here at 7.745 billion bushels compared to 7.609 billion bushels that were expected by analysts. This is a pretty significant amount of grain. What this means is that one of two things: either the USDA is understating the size of the crop last year, or feed and residual use is likely to be a little bit lower than what they're currently penciling into the balance sheet. So bottom line here is this is affecting old crop corn. When you get this kind of double whammy here with new crop acres higher than analysts were expecting, and you have higher grain stocks for old crop, what you get is a very directional trade. And let's take a look at the daily chart and see what sort of damage has been done. You'll notice we were hanging up there right around that 200-day moving average. People think there's a possibility for corn to move higher. Today, we just did not see that. You can see we're now trading down kind of closer to the lows, and you can see that we're really continuing that downward trend. It'll be interesting to see if we get continuation in tomorrow's report. I wouldn't be surprised if we kind of start to find a little bit of a bottom here, at least for the short term, following the very sharp move that we experienced after the report. Just to give you an idea of how directional this trade was, we just didn't come up for air. This is a 5-minute chart of the May corn futures. Anyone can view this. If you have the Grain Hedge Standard trading platform, that's exactly what this chart has come off of. But basically what you're seeing here is a report comes out, market drops very sharply and just unable to rally back at all. One thing I wanted to talk about is of course yesterday we did talk about options a little bit, short-dated options. This is an option expiring on April 2nd. On the May contract, and what we noticed is that this is a 390 put, and that it was trading somewhere right around 5 cents. yesterday. It was really only good for about a day, but you'll notice that that 5-cent 390 put increased to about 14 cents here today. So this is the kind of protection that you can get when you go into these very volatile market events, when you get these sort of events that could cause significant risk to your overall profitability at the end of the year. Sometimes it pays to go in there, take a look at what sort of short-dated options are available, take a look at that, in this case, an April 2nd put, and see what it would trade for. I mean, this is the sort of thing that could have gotten you into a nice short futures position at 390 here when it expires on the 2nd. Of course, you know, this, if it didn't work out, if the market rallied here, you'd be out 5 cents. That's kind of the risk of that sort of trade. And of course, futures and options trading isn't appropriate for all people out there, and we can kind of talk about that. If you do have any interest in using the GrainHedge standard trading platform, we'll just identify whether or not these sort of tools are right for you. But I just wanted to show you, of course we highlighted this on last show, I just wanted to show you kind of what this means when you extrapolate that out one day past the report. Let's talk a little bit about soybeans. You'll notice here, soybeans, big range here today, big wicks on the end of this candle. This is a daily chart. You'll notice that each bar represents 1 day worth of price activity. And you can see where we dropped right below that 953 support that we had back on the 18th. And it almost has that feeling that in the chaos following the release of the report, when people are digesting numbers, when regular traders who don't have access to immediate data feeds are being hung up on the website and it's not loading properly, it almost had the feeling that the market traded in the exact opposite way that you would expect following this report. It almost went down right below those lows. It almost feels like someone was out there stop hunting when there was a lack of liquidity and a real a flurry of orders in the market. So of course, we ended up closing strong on the day. I guess from my perspective, I look at this trade action today. I would not be surprised if we start to move higher here with these acreage numbers. I think that it's very possible that we get up right around that 20-day moving average. We kind of work through it. I don't necessarily think this is the start of a bullish move long term, but we could get some follow through in the following days here. So just be wary of that if you're out there trading soybeans. This is the 1 minute chart, and this is what I was talking about, that very volatile reaction following the report. We traded higher, then we immediately traded lower in the 2nd minute following the release of the report. Finally able to find a little bit more stability here and close positive on the day. So it does look a little bit positive here for soybeans. It is good to see. This is the wheat chart. The wheat chart really very directional as well. Just started selling off in the beginning part of the day, really erasing all of yesterday's gains. So it's going to be interesting to see what happens with wheat. It's just very big roller coaster ride. You know, it almost has that feeling that we're kind of hammering out a base down around this level, but we'll have to see if there's continuation. Maybe we'll be able to find some support down around the 20 and 50-day moving averages that seem to be the lows that we've really been able to kind of hammer in since the beginning of February. Other than that, guys, that wraps up today's show. If you do want a GrainHedge standard demo to see what it's like to view these live markets as they trade, go to grainhedge.com, go up in the top right-hand corner, there's a button that says 14-day free trial. Click on it, put in your name and number, we'll be in touch with you. We'll provide you with the educational material you need so that you feel comfortable and get the most out of that demo. Thanks a lot for tuning in, and remember, there is substantial risk of loss in trading futures and options, and futures trading is not appropriate for all investors. So do consider that before you think about getting into futures and options. Thanks a lot for tuning in. We'll see you here on Wednesday.